Welcome to the Reverse Mortgage Podcast. I'm Bill Gross, your host. We get together every week with leading members of the industry, originators, management, vendors, in this case, a leading originator who's going to tell us the best ways to use reverse mortgage and the worst ways to avoid using. Matt Allen of American Senior. Matt, thank you for joining us today.
Thanks, Bill. Super excited to be here with you.
What's the best ways to use reverse mortgage?
In my opinion, the best way to use the reverse mortgage is strategically, right? Not as a last resort. And there's so many different strategies that can be implemented, and they're all very simple. And it can have a massive impact on a retirement plan for the better, leave larger estates, just being strategic, because for most people, their home is their largest asset, and why are we not utilizing it in a retirement plan? And it not even have to be part of the retirement plan. There's other ways to use it.
So the first best way, I don't know if I can summarize this, is to plan ahead rather than respond to crises as they occur.
Yeah, unfortunately, I think most people live for the day, right? Like, I don't need a reverse mortgage today, but then tomorrow they do, right? Now I'll look at it. Now that I need it, I'll look at it. The reality is, had they implemented the reverse mortgage early on as part of an overall retirement plan, along with their stocks, bonds, IRAs, etc., the outcome can be significantly better. And there's some really simple strategies. One of them is what we call the coordinated spend down strategy, which is working with your financial planner. If, let's say, on your annual review, your retirement plan is negative, right? It returned negative 10 or 20%. In that year, you don't draw any more money out of your retirement portfolio. You draw it out of the reverse mortgage, allow your portfolio to recover. Then on your next annual review, is it positive? Yes. Then stop drawing from the reverse, start drawing from your portfolio again, because you don't want to be drawing out money when your portfolio is down, because you're locking in losses, and your money may not last as long because you're drawing it out when it's already in a down market. So that's one of the simple strategies.
So let's talk about that for a little bit. So when your portfolio is down, and there are some people who experience that of late, it depends what stocks you're in and such.
Yep.
You're not, if you need money every month or every year, it has to come from somewhere.
Yep.
And if the stocks go up and down, when they're down, that's going to force you to cash out those losses in that year, in a year that you have maybe even less income, where it might be more advantageous to take the loss in a year when you have more income. Maybe you sell property and you have some gains you want to offset. And so it forces you, now you're making a decision for your cash flow needs rather than strategic what's best for your tax outcome of when you liquidate the stock. Is that kind of what we're talking about?
Sort yeah. So I mean, there's different ways to look at it, right? If your portfolio is negative for the year, like you said, you don't want to lock in those losses. Maybe you do. It's kind of dependent, like you said. You sold other property, or you have additional income, you're high income. Maybe you do want to take those losses that year.
Right.
The problem is, though, if you look at that, then you are locking in those losses. Your money is not going to last as long. Because of you were locking in those losses and taking that money out, right? It's not going to grow. And so again, everybody's situation is different. I'm not saying that everybody should use this strategy, but it is worth talking to your financial planner, your CPA, to be like, look, what if we set up this other bucket of income tax-free funds so that if these things happen, right, large expenses, the market's down, whatever, if we can do better planning, right? Your CPA can do better planning.
Right.
If we get a long-term care event or healthcare costs, we need to draw out $100,000. Well, your CPA could look at that and go, well, maybe we don't draw it all out of the portfolio. Maybe we only draw a portion out of the portfolio, the rest of it from the reverse mortgage, so we can keep you in a lower tax bracket.
Right.
So again, it allows everybody, including the borrower, the owner of the home, along with their CPA, their financial planner, maybe even their estate planning attorney, to do better planning.
Right.
The more better planning we can do, the longer we're going to have, money is going to last, and leaving a larger estate through this planning.
Well, I think the line of credit feature of most reverse mortgages is kind of like a universal tool because you can use it so many different ways. It's kind of like a good hammer. You use it to hammer. You can pull nails out with it. You can bang this, bang that. It wasn't intended for those uses, but it's effective. And I think the second mortgage, same way that even if you just got it originally to pay off your current mortgage, and over time, the line goes up. Well, you discover 1 year in an out year that your portfolio's down. You can access that equity without more closing costs because you've already paid for the loan.
Yep.
Or you have health care. You can pull the money out temporarily while you figure out what you want to do, so you don't have to commit yourself to that. So, okay, so one of the best ways then, I think, is really just planning ahead, and I think that means planning for the eventual problems that come with life and being prepared for them rather than just planning for one particular scenario. Is that
Yeah.
make sense?
Yeah, it's because the thing I hear a lot is I don't need a reverse mortgage, right? It's like, well, you also didn't need to save for your retirement. You didn't need to get life insurance. You didn't, there's all these things you don't necessarily need, but they're a good idea to have, right? And a good idea, like it's a good idea to save for your own retirement. So the easiest way I look at it is, I get you don't need the reverse mortgage today. You own your home free and clear. But if you set up the reverse mortgage, you set up that line of credit and it's growing, to me, it's almost like an insurance policy, right? So if things do go bad, you've got a backup here. And I just saw a survey that came out that people are more afraid of running out of money in retirement than they are of dying. Right?
Wow.
So if that is the case, why wouldn't you set this up? It's a backup source of funds. Should you run out of money, should things go wrong, in that plan, you've got this backup source of funds. And there's just no reason not to do it. And the thing I hear from people is like, well, what if I never use it? Well, that's a win, right?
Yeah.
That's a huge win, okay? But the likelihood of you needing it, for most people, if you have a portfolio of $1 million or less, the likelihood of you needing this at some point in the future for healthcare costs, long-term care, et cetera, is pretty high. So,
I've every plane I've ever been on, we had a life jacket underneath the seat,
right.
And it's so far in my life I've never needed it, thank God.
Right.
But because I have it, I'm not going to tell the plane, oh, just don't bother packing one for me. I'm not going to need one. There's proper precautions, and I think that's just part of life. And so the reverse mortgage kind of fits that. Matt, you've been doing reverse mortgages for how long now?
Over a decade.
And I don't know. I was a loan originator. I started my career in 1986, and then moved to real estate full time in 2009, 10 when the market was going through changes. But I did a couple of reverses, what I kind of call reverse mortgage 1.0, which was a whole different world. You go to 80% loan to value. People found their mortgages upside down. There were no restrictions on the money, and so salespeople were unscrupulously taking the money and then buying high commission equities with it and churning the equities, and the money would all disappear. And I call that one of the problems with the reverse mortgage, kind of the stink of 1.0. And it seems like the reaction I get when I talk to, and I'm a real estate broker, I don't do reverse mortgages, I work with originators. But what I always get is, oh, like you said, I don't need one. They don't need one, or financial plan, well, they don't need one. Well, they don't need a hammer either, but if you want to pull the nail out, you need to get the little claw thing in the back of the hammer and pull it out.
Right.
And I think that there's this process that we really need to kind of undo the past and say there's a lot of protections in this product. This is a different product than the reverse mortgage that may be on the books. Maybe the customer took one out 20 years ago. They still have it. But it's a different product. The new ones are originating today than the last one. So talk a little bit about how you see the protections that are built into this product and how that protects customers who don't need one, but this could be a very valuable tool to give them some flexibility.
Yeah. So there's a lot of protections in these things. One of the things is counseling, right? So you don't have the sales guy telling you all the stuff that's not true, and then you get into it and they're like, wait, I didn't know this. So counseling is huge, right? And what I always tell clients, the purpose of the counseling is it's a neutral third party. They have no vested interest in whether you get a reverse mortgage or not. They're there to tell you the truth. Generally, what I hear from my clients is, well, counseling is stupid. I didn't hear anything you didn't tell me. And I'm like, well, it's not there for me. right? It's there for other originators that don't really know what they're talking about because they don't really do many reverse mortgages. So that's one protection.
Well, hold on a
Um,
second. Let's stop at that.
sure.
There's a lot because I think sometimes you're in the business and you don't appreciate how important it is. So what you're saying is um, the counseling is really important for people who don't work with professionals like you.
Yeah.
May not be valuable for your customers, but maybe provides a backup or certification that the work has been done. That's a good thing, right? If your customers
Yeah.
are bored, they should be gratefully bored that you did a good job and appreciate who you are as an originator, right?
Yes. Yeah.
And the problem is, as a real estate broker, it seems to me like 90% of the reverse mortgages are either done by a regular loan originator who hasn't done one in a couple of years and won't do another one because they botched it so badly, or by a call center who knows where they are, what they are. They have to advertise so much because their service is so bad. And that's what customers are getting. They're not normally getting a Matt Allen. So let's stop right there for a second, talk about the importance of the information you're giving. How do you get the chance, or what's the process like where you're able to educate your customers so they can go into this confident and comfortable, and or they're professionals, they're estate planning or attorney or accountant. What's the process by which you're going to help these people feel comfortable and confident that you're in charge of this or you're providing this tool and helping them through it? They're not going to get somebody who needs that kind of hand holding.
Right. I think it's just, for me, it's doing a deep dive into what their financial situation is, right? What does your income look like? What are your assets? Do you have long-term care insurance? What are the gaps in your retirement plan? Do you have longevity in your family or do you not? Do you want to leave as much to the kids as possible or you don't care, right? So there's a lot of questions that I go through to really figure out and understand where the client's coming from. But then, plenty of time for them to ask questions. And I try not overwhelm people with, how much I know because they don't really care. They want to know that I know that what I'm doing, but I don't want to just sit there and spend an hour just talking about reverse mortgages because I don't want to go out to the weeds with stuff and confuse people. Sometimes they do ask questions that are out in the weeds, and I'm like, look, you're going to ask, that question's a great question. We're going to go out in the weeds because I'm going to give you a detailed answer, but it's almost irrelevant. But you ask, so you want to know. So I will educate them. Every one of my clients, I give them my book so that they can go through it and read that and educate themselves there. I just try and give as much information as possible. Depending on what they're trying to do, we also will do forecasting. What if you did continue to make payments or partial payments? What does that look like? Or what if you got the reverse mortgage and in 5 years you're going to need a new roof? It's going to cost 30 grand. In 5 years you take 30 grand out. What is the impact on that over time, right? So really doing a deep dive to make sure that they are as educated as possible and feel comfortable making a decision, whether that's to move forward or not. But that is my goal, is to make sure that they are as educated as possible.
You start off with the education process, and that we said maybe some people don't think they need it. I think what's probably more accurate, because you take great pride in your knowledge, is that, and I think this is where as salespeople we get off track. We think the customer, when they ask question A, only wants to know the answer to question A. In reality, sometimes question A is an addition for a knowledge of the whole product. Mm-hmm. And when we handle question A in a proper professional manner, not too much, not too little, just right,
yep,
we've shown them that A, we know that, and B, we're available for other things as well. Mm-hmm. There's a saying, who you are speaks so loudly I can hardly hear what you're saying.
right.
And I can just tell in your enthusiasm to discuss this that a customer is going to realize that you're an expert in this area. They're probably going to ask you one or two questions, and the rest they're just going to go, I really don't want to know that much about it, and I trust this guy. He seems to really know what he's talking about. And I think professionals as well get that sense. And so I think for all the originators listening to this, that's the goal that I have of this podcast, is that we should be so well educated and so comfortable in explaining these things that customers understand the difference between an expert like Matt Allen and people who are just winging it. And if we all have to make a living, and we have to learn, and we all did our first deal. But there's a difference between misleading a customer and telling the truth. And so I really appreciate, Matt, your approach. And you talked about your book. We're going to get back to that in a second. Let's talk about your standing in the business. Do you do just reverses? Do you do reverses and regular mortgages or forward mortgages, as we call it in the industry? And how long have you been doing reverse mortgages overall? You said 10 years. Is that a focus of yours, or is that just something that you've done a couple along the way?
No, all I do is reverse. It's interesting, and I'm, a pretty good producer for reverse. I'm all referral based, right? And it's funny because you mentioned, the loan officers that will do one and then they'll never do them again. And I actually have a lot of loan officers that refer me their reverse mortgages for that exact reason, right?
Right.
It's like it's a fly in the ointment, or a wrench in a well-oiled machine, because reverse are so different, and it's hard to wrap your head around the reverse versus a forward. And
Right.
so, so for 10 years, it's reverse is all I've done. And interesting enough, prior to reverse, I did regular mortgages. I would say I was a average, maybe even a below average loan officer, because I did everything, right? I couldn't focus on anything. I didn't know who my referral partners were. I didn't know where to market. I didn't know what differentiated me amongst the sea of loan officers, right? So when I focused and just decided to do just reverse, it was a game changer for me, in my business, because I had clarity around
Right.
everything, like who my referral partners are, why they would refer me, what problems I solve for them and their clients. It just made everything significantly easier. And now it's so, because this is all I've done for 10 years, is it's so easy for me working with a client, understanding what their issues are. It's just significantly easier.
One of the challenges that originators have who are looking to get into reverse is, wanting to tiptoe in. And I know the same in real estate. I focus on probate real estate. I made the decision, all my lead generations in probate. There are certain types of other listings I'll do. I don't work with buyers, because in probate, you don't typically work with buyers. You work with the sellers and the estates. And people call me, can I show them a property? I'm looking for like a $5 million, warehouse in downtown LA. I say to them, look, I appreciate the call, but frankly, I just don't know the product. I don't know the zoning. I don't know the issues. It's not that I couldn't learn it and be good 5 years from now, but 5 years ago, I made the decision to be an expert in this other thing. But that clarity you talk about, I think, is so comforting, that I know that I get business because of that clarity, because of the value I create for customers. And so I think one of the things that you do is you must be very valuable to your referral partners. I would imagine an estate planner who wants to help a customer unlock the value of their equity would see you as a great resource, because rather than having to sell the stocks all the time and really focus on what the price is every quarter or every year or every month they pull money out, you become very valuable to them as a resource rather than just a guy who did a service for the same customer.
Yeah, it's solving problems, right? And I'll give you a perfect example of like a financial planner and what is possible when you implement the reverse mortgage. So I had a financial planner that referred me a client who was basically drawing way too heavily out of their portfolio just to make their mortgage payment. And so she was going to run out of money in 7 or 8 years. I don't know, 7 or 8 years. By getting the reverse mortgage and not having to make that payment anymore, it increased. So she would run out of money, and I think it was like 15 years, 15 to 17 years. So we added 10 years of income to the client's portfolio, right? And for the client, that's great because she's not going to run out of money. For the financial planner, that's great because that's more assets under management for a long period of time. So it's kind of a win-win for everybody.
Right.
And generally, that's what I see with financial planners is the referrals from clients that are either going to run out of money sooner than later, or I try and talk to them to not do this, but that have run out of money. And now I'll refer you, over the reverse mortgage guy. The reality is that the impact could have been much greater, and the money could have lasted a lot longer, and that retirement plan wouldn't have failed had we implemented the reverse mortgage early on into that plan.
or
Um,
or the quality of life. Maybe they had to
the
sell a
quality
house
of
because
life.
they couldn't afford the
Yep.
payment. Meanwhile,
Yep.
like I live near my kids and grandkids, so it's quality of life that extends my quality, the quality of the living I have versus having to move to a retirement community to save
Yep.
money. Doesn't
Yep.
make much sense.
Yeah, it's interesting because you're probate. So I get a lot of phone calls from people that are running out of money to pay for care, right? And almost it's almost the same. It's almost always 90 days before they're going to run out of money. I get that phone call. The problem with that, and again, this is the problem of not planning for this, is that, okay, you're calling me 90 days before you're going to run out of money. Now the question is the person or one of, the spouses, do they have a cognitive issues? They have dementia, Alzheimer's. Now do we have to get a guardianship or a conservatorship set up? That's going to take several months. The court has to approve that. They have to approve the reverse mortgage. So you could run out of money before we can even apply for the reverse mortgage.
Right.
And then depending on the value of the home, how much money are you going to get and how long will that last? So a lot of times in those situations, I'm like, look, it's going to make more sense for you to sell that house and move them into memory care or assisted living or nursing care, whatever it is. It's going to make more sense financially to do that than it is to do the reverse mortgage.
It's too
But
late.
again,
It's
yeah,
too
it's too
late.
late, right? So that's again where this planning comes in. Let's say you're 62, you own your home free and clear, you got great income assets. I don't need a reverse mortgage. But if you set up that reverse mortgage, that line of credit's growing, right? To where, when you're in your mid to late 80s and you start needing care, you've got this huge source of funds that are income tax free to start paying for that care, to keep you in your house, to if family's taking care of you, maybe you pay them a salary, right, versus in-home care provider. So you don't become a burden to your family. And families would say, "Oh, you'd never be a burden to me," but you are,
Right.
right? Either financially, they have to quit their job, they're not working as much. Maybe they get fired because they're missing too much work. Um, they're out of pocket paying your bills,
Right.
doing remodel. I mean, there's all these things that, again, why wouldn't you be prepared for that?
I don't have any scientific data to back it up, but my experience with customers, with family, is that running out of money is almost a cause of death. The stress of it, the negativity, the kind of sense of, my financial life's coming to a close, therefore, I am, and also having to sell the house for some people. Not to say that there aren't people who move and have great improvements in their life experience, but there are some people who are forced to sell. They don't want to. They didn't
Yep.
plan ahead. Financially, they didn't plan ahead. It's a whole big mess at that stage. Like you say, memory care and getting them signing the papers, the whole thing is just a nightmare. But my sense of it is that almost contributes to death. I've seen that happen where they sold the house and bought some home hoping to get out of the memory care and they don't come out because in their mind, they're only doing this because their life's coming to an end. Their house is at an end, as opposed to, you might say, well, yeah, but you're moving to this new adult center in Florida and they have golf and they have pools and stuff. But they don't see it that way. That's not how it goes. And that's where the reverse mortgage, I think, gives you the planning to make what happen rather than be kind of the result, an effect of something that's going on in your life.
Hmm. Yeah, what's interesting about that too is you'll hear, well, if my wife or my husband was in that position, I would take care of them, and that's generally what happens,
Tuh,
right?
good
But
luck.
yeah, caregiving is hard. Emotionally, physically, it's hard. And so really what's needed in that is respite, care so that you can get a break, that you can, take a couple days off and not have to worry about that, rejuvenate yourself. And again, having the reverse mortgage gives you the ability to pay for caregiving. Right now, 24-hour in-home caregiving, $30,000 a month.
Whew. Because you're talking
Memory,
about more than one person, you need two or three people to on
right?
shifts if it's 24/7. My next
Yep.
door neighbor has that. They have three caregivers who trade places all day long.
Yep. Yeah, it's crazy. Memory care generally 10 to 14,000 a month. Assisted living, depending how much care you need, but between $4 to $8,000 a month.
Wow.
Long term care is expensive. you have about a 50-50 shot of needing long-term care. So, if you're a married couple, it's not really a question of if, it's a question of who,
Right.
right? And you've got to have a plan around that, whether that's long-term care insurance, the reverse mortgage, planning with your estate planning attorney, your CPA, your financial planner. You have to have a plan around that, or it's going to fall on the shoulders of your family, and that can be really, really tough.
I had tasted that. My wife was fighting cancer for 2 years, and so she wasn't available. She was in a doctor's office or the hospital every day over a 2 year period, and so I had to drive her back and forth. And then she was there. And, my wife had a dog. So all of a sudden, now I'm the primary caregiver for the dog, and I'm a kind of a kept man. I'd also have to do laundry and cooking and shopping. And I remember one day I was talking to a friend of mine, and I was just saying, "Man, I'm just feeling so down." And he said, "Well, I wonder why." I said, "I don't know, man. I'm working hard." And this, he goes, "I wonder why you're feeling down. What? Your wife's in the hospital. One, two, you're exhausted." God, I didn't really think about it. It is exhausting, and that wasn't even her being in the house. And then physically, the few times I had to help her physically, but people do it every day. It's like a full time job. It's just it is a full time job, and either you're going to do it on top of your life or instead of, so you're not making money, or you're going to have to hire somebody, and there's no way around, I think, those options.
Yeah. You got to be prepared for it. You just do. It just makes everybody's life easier. And if you look at it, nobody says when I get to this point, I want to go into assisted living. Everybody wants to stay in their house. If you want to stay in your house, it's the most expensive option generally, depending on how much care you need. But why are you not prepared for this financially? And I think, here's the biggest issue. I think that most people, I think statistically, like 70% of people believe that Medicare pays for long-term care, and it doesn't.
Well, Medicare pays for what it pays for, but it may not pay for what it pays for going forward too. That's a whole nother. How long is Medicare going to be around? Even
Right.
if you're counting on that, that's an iffy proposition, I think.
Yeah. The only thing that Medicare will pay for is like a long-term care event is like basically going into like a rehab facility, right? You get discharged from the hospital
Right.
because you don't really need hospital setting, but you can't go home, and I
Right.
believe they pay up to 100 days.
Exactly.
And
We went
after
through that.
that, you're out of pocket, right?
I think it's
So,
lifetime as well. So if you go through several
yeah,
bouts, my wife again battled cancer and went through there once, but that comes off of her lifetime that she can go to. It's not good care.
no,
Now in LA, it's hard to find any place, let alone quality. You're lucky to find any bed at all. The work we had to go through to find any place that was
yeah,
close by was crazy. But even still, and the Medicare does pay for it for a amount of time. But then you think, well, what if it's longer than that? Um, I don't know what they do. They kick people out. I mean, I'm not even sure what happens, but it's not a pretty picture. So we don't
yeah.
want to be there.
Medicaid will kick in, right? If you spend down your assets and depending on your overall income, Medicaid will kick in. But Medicaid only pays for, I think, 20 hours of care in home.
Wow.
They generally do not cover assisted living, and then your memory care. So again, a lot of this falls onto family. What's interesting is like, and I didn't know this because I actually have a friend of mine that owns multiple assisted living and memory care facilities. Basically, from Sacramento up, there's no Medicaid coverage for long-term care at all. The state doesn't cover any of it.
Wow.
hmm
Wow.
So it is 100% self-pay.
Wow. Well, okay. So, and I appreciate your time. We're going for a long time. You're an
Yeah.
incredible resource, but I'm coming at the end of our time. So you mentioned in passing a book. Let's talk about that because I think the importance of it is, number one, it shows customers, I think, that you have a depth of knowledge in this. Two, referral sources shows it kind of separates you from the average. And I think more importantly, it's a nice way to make the handoff if you're an estate planning attorney or an accountant and as a customer that needs to explore the options. A book is a great resource for them to give out as well as a way to hand over to you. So talk a little bit about the ultimate guide to reverse mortgages and 16 excellent reasons to get one.
Yeah. So again, it's covering that particular book is covering the FHA HECM, home equity conversion mortgage, and it just the first half of the book is just covers all the basics. What do people really need to know and understand about the reverse mortgage? And then the other half of the book is, why do people get the reverse mortgage? What I generally hear from my clients is like, this is great. This helped me understand it. What I don't want people doing is going on the internet, right? Because whatever they think that, about reverse mortgages, the internet is going to provide confirmation bias, right? Reverse mortgages are bad. You're going to find all kinds of articles and opinions on why they're bad. Reverse mortgage is good. You're going to find all those opinions. Opinions don't matter. Facts matter, right? And this is basically just bringing that out. Like, this is what the reverse mortgage is. This is how it works. This is why people get them. And what I have found is it's really helpful for a variety of reasons. One, the client reads it, then they give it to maybe their heirs or other family members to read, so that everybody's on the same page when it comes to making a decision of whether or not we're going to get a reverse mortgage. I just found that it's just significantly it's a major benefit to them moving forward in the process because they have the information to make the decision.
I find, and of course, I do podcasts, which is information, and we're in an age now where there's more information created every minute than anybody could consume, and so more than ever now, it gets down to who's curating the information in a way that's useful and valuable for their audience. Mm-hmm. And that's why I do the podcast, because I have customers and I have referral sources that want to know how I can help them. And the same with your book. I think you are able to both. Yes, people go on the internet and get a lot of information. A lot of it's wrong. A lot of it's just nowadays. It's just auto-generated by some robot. But what's the truth? And the truth is, you work in this industry and have for at least 18, probably 20 years overall, and 10 years or so focused on reverse mortgages. And so this is information from somebody who's in the trenches, doing this day in, day out, reputation-based business on. So not only is the book available on Amazon, which means it's legitimate. That's the actual, as a consumer, if your book's not on Amazon, it's not real. Yours is on Amazon. Right. But for listeners of the podcast, say you have a special offer. So let's go ahead and share that.
Yeah, so if you, obviously you can go buy it on Amazon. I have it priced so that I don't make any money on it, but I'm happy to mail you a copy for free. It is a physical book, so it's not an ebook. So just give me a call or shoot me an email with your mailing address, and I will mail out the book to you. It's pretty that simple.
We have your contact information on the screen down below. mallen@americansenior.com is the email address. If you want a free copy of the book mailed to you, imagine an actual book. And I love books. I'm a reader, and I love paper books. I've tried Kindle. because I'm on the screen all day long, I just don't like that and associate that with work rather than pleasure. So a real book. But more importantly, a chance to learn more. Matt, I really appreciate your time today. Appreciate what you're doing for the industry. Thank you for offering the book free to all our listeners. Again today, go to mallen@americansenior.com to get your free copy, or reach out to me and I'll forward you the information. But Matt, thank you for your time today. I really appreciate you.
Thanks, Bill. I'm so glad I got to come on and do a podcast with you.
Thanks. And for the rest of you, this is the Reverse Mortgage Podcast. We get together every week and interview top producers in the industry, vendors, management. In this case, we had a great producer as well as the author of a book that can help you learn more information and how to do your job better if you're a professional or a consumer, how to learn more to use this tool to improve your finances. If I can help, please reach out at Bill Gross Probate on social media. Love to get your feedback on this, questions, comments, put it in the chat or description down below. If you want to be interviewed on this, please reach out to me, or if you know somebody who should be, love to talk to them as well. As always, make today your best day ever. Thanks so much.